The big business of lending. Dozens of lending startups are competing to make consumer and business loans. Lending Club and On Deck were the first to go public last year, but one that's rumored to come next is SoFi. The startup, which aims to help with mortgage loans and student debt, is announcing a $235 million funding round. We're joined by CEO Mike Cagney for more on what's in store for SoFi. Thanks, Mike.
Thanks for having me.
So $200 million, what are you going to do with this new round that you're raising?
So it's capital that's going to help us move more aggressively into our mortgage business, but it's also allowing us to launch personal loans. And personal loans are a logical extension for our borrower base because mainly they're folks who are coming out of school, they're moving, going into new situations where they can use some money to pay for furniture or get a car or what have you. So it's a logical extension for us. It's a business we're really excited about, and it's one where we think we're going to deliver one of the most compelling personal loan products out there, one of the lowest rates, one of the highest dollar balances, up to $100,000 per borrower. But we're also going to export the SoFi externalities, so things like unemployment protection, where we help you find a job if you lose yours. We're going to bring from our student loan business over to our personal loan business as well.
And so there are so many lending startups. How do you differentiate yourself? How do you get people to come to SoFi for lending?
Sure. So there's about 11.7 trillion of U.S. consumer credit out there, but about 11 trillion is at 7% or less. And so what we did with SoFi, knowing that we wanted to disrupt the broader credit universe, was we created a low-cost marketplace. So we brought in banks, institutional investors, retail, that was looking for a prime or a super prime borrower at a very low cost of funds. And that's allowed us to go after areas like mortgage, go after areas like personal loans, where we can deliver a very compelling product, very compelling value proposition. So we don't overlap with the lending clubs and the On Decks of the world. We're in a very different market.
And why are there so many lending startups? It seems that some of this stemmed from the financial crisis, but why is there such an opportunity here for lending?
Sure. I think the market is enormous, and that's the first thing that's readily apparent to everyone that's looking at alternative lending and why it's such a hot space. There's a huge number of folks that are not getting the credit that they deserve, not getting the kind of credit or kind of products that they deserve, and that creates a great opportunity set for us. I think for us in particular, we focus on a 25 to 45-year-old demographic, and the fact that we went in and created student loan refinancing, so no one did it before SoFi, we invented that product, is testament to the fact that the financial services industry really wasn't geared towards that market. We are very much focused on that demographic, and I think we're delivering some pretty compelling solutions to them.
In some ways, you're similar to Lending Club in that you are a platform. You're not taking on balance sheet risk in the way that On Deck is in facilitating the loans themselves. Why is this the business model that you decided to go with?
Sure. We're a little bit of a hybrid because we do originate our own loans. We have our own lending license, and so we have those loans on the book for a very short period of time. But then they go into the marketplace. They're purchased by banks, they're purchased by asset management firms, they're purchased by retail, and we don't retain any residual off of that. It's a better model because it's much more efficient use of capital. And so you're better off being in the transaction business where you're getting paid to deliver product into that marketplace than requiring large amounts of equity to hold on balance sheet to be able to fund your own loan book.
Lending Club and On Deck went public. Are you guys next?
I think it would be likely that we would be one of the next ones to come out there. So we just raised a round of financing January 30th, $235 million, valued the company at $1.3 billion. I think that the next path for us, or the next stage for us, is going to be a public event.
All right. Well, thank you, Mike.
Thanks for having me.
From New York, this is Katie Roof for FoxBusiness.com.